Welcome back, guys. It's been about a week? My bad for last week. Didn't put up an upload. Wasn't just in the, right mental space for it, and I didn't want to force it, and a lot of other things outside of that with work and whatnot as well. But anyways, we're back, and today I wanted to discuss about some big news that actually happened last week. In particular, with one of Australia's biggest e-commerce brands, arguably the biggest at the moment and possibly into the future. It's because what was announced recently was that Kogan is looking to raise $100 million. That's right, millions with a big M, $100 million. Now, as of recent, I've kind of left Kogan out of my watch list with all the focus on buy now and pay later companies. So we've got Afterpay, we've got your Zip, and we've also got your airlines and travel stocks from Flight Centre, Webjet to Qantas, and I've totally left out the e-commerce space. So today we're going to be able to touch on what's been happening in that space and what Kogan is looking to do with this $100 million capital raising. Now, one thing that's surprising for me is that for a developing country that's adapted the contactless payments such as Quick Pay, with retailers and financial institutions jumping on board, we are actually quite behind in the e-commerce space in comparison to other developed countries like the US, parts of Asia, and the EU. Now, prior to the dominance of Kogan, back in high school and my university days, I was really only using, eBay, and everybody kind of knows eBay, catch.com.au for like those bulk deals, and ASOS for all my clothes. But I remember in 2017, there was news about Amazon coming into the space, and you can imagine a lot of excitement going around that because everybody, including myself, was thinking that we're going to get some exclusives and at the price which match those in the US, which couldn't have been further from the truth because in actuality, everything in almost every category was more expensive than what I could personally find over an eBay or another retailer in Australia online. So with that being the lay of the land of the e-commerce space in Australia, what is Kogan looking to do with $100 million? And so to find out more about this, we're going to head straight into the presentation it provided to the investors on the day that it announced the trading halt. So they're basically looking to raise $100 million to issue 8.7 million shares, which is approximately 9% of their existing shares outstanding. But one thing to keep in mind is not to confuse share dilution with the lowering share price, because with this news, I think what we might see is the stock actually go up. But what I'll do is I'll touch on that topic just a little bit later on, right after you smash the like button for the YouTube algorithm right there below. All right, let's move on with it. The time of this institutional placement of shares has been great because the shares have surged up to all-time highs. So they were able to issue the shares at $11.45, which is a discount of 7.5% on June the 9th of its closing share price of $12.38. So with all this money that they're looking to raise, what exactly are they going to do with it, you might ask? Well, there's only one thing that they can do with it: utter world domination. And when I say world, I actually just mean Australia, because they've recently just acquired Matt Blatt, and I would imagine that they continue to acquire more retailers and to provide the flexibility to pursue any other value-adding opportunities with this $100 million. So it's interesting, right? Because this is quite a different situation to what we've seen with other companies who have raised capital, because they're not looking for cash to sustain their business. Rather, they're looking for cash to expand it and become bigger than the giants that they're growing to be during this time. So in terms of growth of their customers, if we look at the graph here, we can see that their active customer growth in the last year is currently at 2 million. That's right, millions with a big M. We're talking about just under 10% of the Australian population is using Kogan. And that's not including orders of others who would just be living under the same roof and just, be making the one order as opposed to separate orders. So the number that they've given us here is probably just going to be at 10% of the Australian population. That TSR there on the side just refers to their total shareholder return, which since IPO has returned 654.5%, which is some serious returns. It's no joke. Although what you'll notice is if you've been following the stock for quite a while, it's probably one of the more volatile stocks. I would say even on par, not as serious, but on par with Afterpay, when they've come out with announcements of sales slowdowns, and at one point even saying that they weren't going to be publishing sales numbers or anything like that anymore because it negatively affected the share price. But that's all right, it's all good. It's in the past now because they're recording numbers again. Along with the institutional placement of shares, they are also doing a share purchase plan of $15 million worth of shares, with shareholders being able to invest up to $30 million at an attractive price of $11.45. Although they have said that they are going to cap it at $15 million, I somewhat have a feeling that they might exceed that given the growth it's had and what it could become in the future. So that's essentially an overview of the presentation. But what I want to go through in the later half of the video is go through my bullish thesis for Kogan. And to do that, we're going to have a look at the growth of the e-commerce space during this pandemic with some actual numbers and some statements from other stakeholders within the e-commerce space. So with this move online, it's forced many retailers and small businesses to allocate more capital to streamlining their logistics platforms as the demand for physical retail has gone down because, well, nobody can actually be physically in the stores. And so in contrast, what's happened is the demand for warehousing to store all this stock for online retail has now skyrocketed, and I've driven to places where I've seen warehouses in industrial areas being put up. Like I've just seen the steel frames of them being put up and saying, warehousing ready for lease and all this type of stuff. So I see a lot of warehousing and storage space coming up. Now we can confirm this growth by looking at the numbers received by Australia's Post General Manager of Parcel and Express Service. I don't know, that's a rather long title, Ben Franzi, who confirmed that they've experienced a spike in volume as a result of the Rona with the introduction of 200,000 new shoppers entering the market in the month of April alone, which is a growth of 80% in the first 8 weeks of the pandemic, matching the volumes of what it'd be like during the Christmas period. And what this essentially equates to is Australia Post having to open 15 new processing facilities and an additional 8 freighter flights that totals 18 flights a day to make sure the parcels get delivered. Now that's interesting, right? If Australia Post, who's providing the logistics for all of these parcels and whatnot, have now increased the amount of flights that they have to do per day, have opened brand new and bigger facilities to, make sure that they sort out all the parcels properly, this is some serious growth. And now the counter argument for this, and for the bears who are out there, obviously, this is only going to be a short-term amount of growth, right? I mean, Australia is still a small country relative to many other countries around the world. So a spike of 200,000 new shoppers isn't going to be sustained over any period of time like that. And I guess you could argue that things will slowly revert back to normal. People will start going into shops again in the same volume and proceed as normal. But what I would argue is that I really don't think you're going to get the same amount of volume in terms of retail shopping as we've seen in previous years, because there are clearly massive advantages being a consumer and ordering and transacting online. First thing, you don't have to leave your home. That's great. I can shop within my pajamas. Number two, the range of things that you can pick from, because you're not limited to the shops that are in the shopping mall. You can order from any site, any retailer that has an e-commerce platform online. And of course, there's less friction to transacting as well, because for a lot of these sites, you can use your PayPal. A lot of the Google Chrome services will remember your credit card details and all that type of stuff. So your ability to transact is so much easier. Plus, what I think we will start to observe is that consumer behavior heads towards that way, and we see more people start to transact online because of those benefits. But let's not forget, this is a two-way street. Just like there are benefits for the consumer, there are also benefits for the retailers or the small businesses. So now let's shift our mindset away from the consumer and onto the retailer or small businesses. So to meet those demands, a lot of these businesses have moved onto an online platform and placed more capital towards that. And for some of the big players, a lot of them have pushed towards building bigger and more automated warehousing systems, and the focus has shifted from creating an experience in store to an experience online. Now, what does an experience online entail? It means more integration of storytelling, social media marketing, and making content to establish your brand. In confirming this shift, we recently saw in Facebook's update from the man himself, Mark Zuckerberg, who noticed a large uptake in small businesses creating accounts and people flocking to them to receive updates on the business. And it's probably actually the best avenue for that type of communication, given how many people within Australia and in the Asia Pacific region actually use Facebook on a daily basis, or one of their other platforms like Instagram and WhatsApp as well. But Facebook is the one that businesses are flocking to. So tying that all back around, why Kogan? Why is Kogan going to dominate the e-commerce space in Australia? Well, given its growth, we can see that from their 100% increase in sales volume over the previous year and the vast amount of products and services they provide, because it's not just lights, tech, and clothing, they do it all. Mobile plans, insurance, even pet insurance. Given they provide so many services, the brand recognition for Kogan will go a long way as they continue to dominate and get repeat customers, which has been very strong at 103% in April, which is a great sign, because if there's one thing we know about branding, and which we probably do ourselves, is that there's so much strength behind brand loyalty. Once you've had a good experience with that brand, you're more likely to go back to that brand, and especially if it provides a good price and a great experience. And what generally also happens is that we recommend that brand to other people, and so they also then potentially become repeat customers. But what's good about Kogan, which is very similar to Amazon, is that they've made their own products, which is nothing new, because I remember distinctly buying a Kogan battery pack like 7 years ago or so, but now their range of services and offerings have branched out into so many other things, including financial services. Now imagine if they add some other retailers to that list, like what we've seen here with Matt Blatt. They'll be able to leverage their logistics and services into other businesses that haven't been able to do it before and have suffered accordingly during this whole pandemic situation, because they haven't able to be adaptable. They haven't adapted to it. So in my honest opinion, and just my personal honest opinion, don't get mad at it, get your own advice, all that disclaimer type of stuff, I honestly think that this share in the next couple of years or even sooner could hit $20 a share and continue to grow. Because although we're seeing things starting to ease up, I think many people are starting to see the benefits in having all this convenience in e-commerce. And if I can go to one website that is my one-stop shop for many of the things that I need, like buying a laptop for my kid or going to sort out all my other financial stuff on the side, then Kogan could be that one leading retailer in the e-commerce space. But yes, guys, that is my bullish thesis for Kogan. Do any of you guys own Kogan stock? When did you buy it? Are you going to keep buying it? Is it on your watch list? Let me know down in the comments below, and also include in your comments if you made it this far into the video. First of all, shout outs. Thank you so much for making it this far into the video. It really helps the video out. But comment down below, include in your comment a car emoji, any type of vehicle. It doesn't have to be a car. It could be a van, whatever. Just include some type of vehicle in the comment section down below. That's it for me, guys. I'll have another video this week for you guys. Catch you all later. Cheers.